$75 billion, was proof that the U.S. was losing. He accused China of stealing intellectual property, manipulating its currency, and using unfair subsidies to dominate industries. The stage was set for confrontation. In 2018, Trump fired the opening shot, imposing tariffs on $50 billion worth of Chinese imports. Beijing retaliated immediately. The U.S. escalated further, adding tariffs on an additional $200 billion. By the end of the year, over $500 billion in trade was tangled in restrictions. For the first time in the modern era, two superpowers were weaponizing trade like artillery fire. The world's markets quaked. Stock indexes fell, supply chains froze, and companies scrambled to adjust. Farmers in the American Midwest lost their biggest buyers overnight. Tech giants like Apple and Intel warned of disruptions. No one could predict how far it would go, or who would blink first. The breaking point, the world's supply chain shatters. By late 2019, the trade war had mutated from a political standoff into a global economic shock. For decades, globalization had made the world operate like a single vast factory. Raw materials from Africa, components from China, design from California, and assembly in Southeast Asia. Now, that seamless system was unraveling. Tariffs made entire product lines unprofitable. Companies that once relied on just-in-time delivery found themselves paralyzed by new costs and uncertainty. The gears of global commerce began to jam. And then, just as tensions reached their peak, the world was hit by something no one had foreseen: a pandemic. When COVID-19 erupted in 2020, supply chains that were already strained collapsed entirely. China's strict lockdowns halted production. Shipping prices soared by thousands of %. Factories from Europe to America sat idle, waiting for parts that never arrived. The realization was brutal. The world's most powerful economy could not function without its biggest rival. Even essential goods, masks, gloves, medical equipment, came largely from China. It wasn't just about trade anymore. It was about dependence. The trade war had exposed the fragility of globalization, and the pandemic had magnified it. The fallout: winners, losers, and the invisible cost. The trade war was meant to protect American jobs, but the numbers told a different story. Tariffs ended up costing U.S. companies over $300 billion, most of which was passed on to consumers. Prices rose, uncertainty spread, and industries struggled to adapt. China, while hurt, proved more resilient than many expected. Rather than collapse, it pivoted inward, launching ambitious plans to achieve self-sufficiency in critical sectors like technology, agriculture, and energy. The U.S. responded by trying to diversify supply chains, encouraging firms to relocate to countries like Vietnam, India, and Mexico.